We've definitely seen some recent record highs for the North American equity markets. We're seeing a little bit of a pullback today, but for more on why they've been grinding higher and whether or not that will continue, let's turn to Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management, standing by for us at the TSX Broadcast Center. Diana, good to be with you today. Bit of a down day in the markets, trending a little bit lower right now. First, let me ask you, what are you hearing in terms of why we're seeing a bit of a pullback and the trends lower over the past hour or so? What's going on?
Definitely a market is trying to pull down and is met with buying. We've seen this last week one day and the market turned right back up. Today we're having a bit of rotation. We have some major stocks, large caps that's pulling the indices down. GE is down, I think, almost 9%. Actually, Hasbro is down 9%. GE is down about 5-6%, I think, when I left the office. So those are big cap stocks that are in the indices and are dragging it somewhat down. Another reason that we see NASDAQ down a little bit, we see a bit of rotation going from the FANG stocks, as they call it, Facebook, Apple, Google, Amazon. A bit of rotation. It's been a week and a half of this, going into what they call the old tech, Cisco, Oracle, even IBM. When they reported last week, 22nd consecutive revenue decline, markets seem to think that this is probably the end of it, and so rallied IBM up on the highest volume in a decade. About 9%. This was last week. So we're seeing definitely a little bit of rotation. Money is not leaving the market, and this has been a characteristic of the market, is that money is not leaving the market. As a matter of fact, it is still not fully invested from what we hear from our sources, whether it's prime broker desks or portfolio managers. There's still money out there that's very cautious and very, very cautious of the market, so it's not in. So dips are still being bought and definitely some rotation.
Do you think that the rotation in those U.S. markets will continue? That's been a big question mark in terms of whether or not now is the right time to sell or at least trim your positions in some of those FANG stocks. You know, when you see them down on the day like we are today, you always have to wonder if this is the beginning of more to come, and so often it is just not. You might as well just hold on or buy more. What do you think?
To your point, it's very hard to tell when a business that is in flux, when it's a world that is changing and something that is new, and it's hard to compare how far is Google going to go, how far is Amazon's business going to go, how is it actually disrupting and changing our lives. It's very hard to put metrics on it. What people might want to do if they feel fearful in terms of diversification is to barbell your tech portfolio. Perhaps you have a bit of old school, perhaps you have a bit of new school, and diversify yourself that way. From our perspective at Barometer, we have stop losses on our stocks, and if the stocks are underperforming relative to something else that is performing, we like to go to the best neighborhood out there. So it happened in the past that we would be taken out of a stock and then, you know, a quarter later pull back in, but that's okay. It's not about maximizing that return. It's about having return with a proper amount of risk out there, and a diversified portfolio being where it's right. So bottom line is, do we say sell your FANG stocks? You know, some of them look a little less constructive than they did before, but they're pulling into support. So, you know, I would probably stay with definitely. We're still holder of Apple and Cisco and so forth. So we diversify.
And just quickly and interestingly, you know, when you talk about some of the move into the you know, kind of old school tech companies. What about some of the old school industrials like GE? You cite the fact that GE is weighing on the markets today. That is true. It was down 10% on Friday and then actually ended up the day 1%. Now we've got some downgrades on the stock, weighing on it once again. I just wonder if this isn't one of those large cap value companies that investors will want to buy because everybody's searching for value. You've got a new company management in there to potentially try to turn it around. What are you doing with GE today? Are you stepping in at all?
No, this is not our style, but I totally hear what you're saying. And it is a buy to somebody. This is not how we manage money to our strategy, but it's certainly The turnaround on Friday is perceived by many technicians as a bullish sign that it has put in a bottom. And I'm really glad you asked me about this stock, because I think that this has to do, the sell-off today also has to do with ETF flows that need to be rebalanced. GE is in many ETFs, and when a stock like this moves down, you look at the volume today, it's going to show up at least 3 or 4 times the average daily volume. Some of it is probably cleaned up, but in the world of ETFs, the sell-offs and the rallies last a little longer, as there are more hands that need to trade for their reasoning.
And just to be clear for our viewers, you're saying that there's outsized volume because the ETFs have to kind of catch up with whatever the weighting, the index is now representative because of the decline in the share price or the increase in the share price.
Yes, and also the actual there's ETFs that not S&P ETFs or Dow ETFs, say the dividend payer ETFs or high vol or low vol. Those GE is in those as well, and there is some conversation as to whether GE is going to cut its dividend. Generally speaking, they should wait for that event to happen, but it's possible that there is some lightening of hands there as well.
Okay, Diana, let's switch to the Canadian market, the TSX. What are you seeing in terms of the recent performance, and what might drive it higher from these levels?
Wow, the financials in Canada have really rallied the index from one of the worst performing or underperforming of the year to we're skirting highs over 6 weeks. The financials, when they report, which is in another month probably, everybody's always expecting the worst out of the financials. It looks to us it's possible that they might be okay. Again, that was the big surprise. There were 2 big surprises on the TSX. First, the financials third quarter reporting was much better than expected. There were some very fearful indications there. And the second surprise on the TSX, for the Canadian market, has been the 2 rate increases that Mr. Poulos has engineered over the last 3 months and the ensuing Canadian dollar rally. So we're off our highs on the Canadian dollar, and we're waiting to see whether these energy companies can pick up some of the slack. They've been on and off sloppy, in fits and starts, doing okay. General interest is only in the large caps. Volume today is fairly light. I think that probably the same things drive the quarter end, the year end. Hopefully our financials come through again.
Okay, we've got to go, but Dana, I have to ask you, with the fall fiscal update, Finance Minister Morneau tomorrow, is there anything that you think will move the markets up or down, something you want to hear or do not want to hear?
I think the street is very much focused on Poulos on Wednesday.
Okay.
Don't really know what to say. We've been surprised before.
Okay, we'll leave it there. Dana, great to be with you today. Thank you very much. Thanks.